All right, but yeah, now we're ready, guys. It's lesson. I think it's lesson 9. It's either lesson 9 or lesson 10. But this is single-handedly the most important amount of time that you will spend studying trading in your lifetime. This class right here. This one right here is where I need you locked in. I need you taking notes. I need you listening to every word I say, because if you fully retain and apply this information today, it will change your life. I promise you. This is the one that will turn you into a demon. All right? Today's daily profiles, man. It's time. It's time, man. Sipping on my fucking drink. Where's the cam? You don't need the cam. You don't need the cam to learn the information. Stop asking where the cam is, dude. Holy. All right. I'm about to transform. I hope that doesn't mean what I think it means. All right. So, it's time, bro. It's really time. This is the most anticipated video of the series without question. All right? So let's get it done. All right. Oh, I'm going to make sure this one's nice and pretty for you, too. I don't think D-Town appreciated that. Oh. You guys are getting freaky in the chat while I'm trying to teach you something. Alright, cool. Coolio. Bro, that cat gif is the greatest thing I've ever seen. Alright. Sipping on my fucking drink! Come on, bro. There you go. All right. So, there's more than 3 daily profiles, but I only pay attention to these 3 daily profiles that I'm about to show you, okay? Me personally, I don't fade the daily profile. I mean, the only time that I'll trade against what I think the daily profile is if I'm trading the manipulation leg. But you guys should not be doing that when you're first starting to use it, so that doesn't matter. But I never fade. I never fade the daily profile, ever. This is the staple of my trading, okay? So, the first of the 3 daily profiles, and the one that shows up the most, is, hold on, actually, I have to answer this text. This one's pretty crucial. Oh, never mind. Okay. The first one that shows up the most is called a London reversal. No. A London manipulation, New York reversal. So this is the one I'm showing you, and I'm going to show you a bullish and bearish example. So let's put the name down just so it's nice and clear. Okay. So, I mean, reading the name, I'm sure you can kind of put the pieces together already. But a London manipulation New York reversal is when we look at midnight open. And when midnight opens, you want to see a manipulation into a high time frame key level. And when I say high time frame, I'm typically referring to above the 30-minute at least, but it's typically the hourly. It's typically the 30-minute and the hourly where I'm seeing these things, okay? So during London, from midnight open, we get a move down in a bullish scenario to a high time frame key level. Okay, so let's say this is like a high time frame order block. Okay? We manipulate into that, and then going into New York, and New York, for me, in my book at least, starts at 8:30 a.m. EST, because that's when the New York pre-market starts, okay? So anytime, if we're below midnight open, from 8:30 a.m. EST moving forward, I'm viewing it as a London manipulation, New York reversal to the draw on liquidity, as long as we're coming from a high time frame key level. So, like I said, hypothetically, let's say this is like a 1-hour order block. New York opens, I would expect it to deliver the drawn liquidity, and I'm always, in this scenario, going to be taking profit of some sorts at midnight open, because I'm typically in below midnight open, like before we actually get the full move. So I'm usually taking profits at midnight open or going to break even or something. And the draw on liquidity typically is going to be previous session liquidity. So it's typically going to be like an Asia high or low or a London high and low, typically. So this is what that would look like. So midnight opens, manipulation leg down into a high time frame key level. Anywhere from 8:30 a.m. EST moving forward, if we're below the midnight open and we have a high time frame draw on liquidity to the upside, you would want to see a reversal to that. Okay? So that's a bullish scenario. Now let's do a bearish scenario. So literally just flip these. Why does it feel like there's a fly on my neck, dude? God. Ow! Sipping that motherfucking drink. If you're watching this on YouTube, please try your best to not ejaculate to my face cam. Please. I don't want any more screenshots. Okay, because the one time there was a screenshot where I went like this with my nips, and I had my tongue out, and someone busted a nut on it. I don't want to see that anymore, okay? But anyways, so the bearish scenario would literally just be the opposite. Wow. So the New York reversal can start at 8:30. It can, yes. Because, well, that's not even what it's about. It's not about it starting then. It's the fact that if we are, I'll just start with the bearish scenario, then I'll answer that. So midnight open in a bearish scenario where you have a high time frame bearish drawn liquidity, you would want to see midnight open manipulate up into a high time frame key level. Let's say it's a 1 hour fair value gap. And then anywhere from 8:30 a.m. EST moving forward, if we have a lower drawn liquidity and we came from a high time frame key level, if we are below midnight open, you should expect a reversal. The manipulation doesn't have to start at 8:30, but if we are above midnight open and already traded into a key level, you would expect us to have a reversal to the drawn liquidity. Okay? So let's say we came from the key level, now we're trading, we got to midnight open. Typically, you should already be in a trade by the time we book midnight open, but let's say we still haven't booked it on liquidity, you can still catch trades here. So midnight open, we manipulate up into a high time frame key level. We get the reversal going into New York, book midnight open, book the draw on liquidity. And like I said, the draw on liquidity is typically going to be a previous session liquidity. So previous day high and low, London session high and low, Asia session high and low. That's typically what we're booking. Can you manipulate me more? You're a minor, so I'm going to go ahead and say no. Okay? So let's go ahead and refrain from asking me if I will touch you if you're a minor. Okay? But yeah, so bullish and bearish scenario right there. Take notes and ask questions. Oh, ask questions if you have questions right now before we move on, because I don't want you to have questions later and then there's 3 different models we're talking about. So ask questions if you have them now. Why midnight open? It's considered true day open. Do I know why? No, I have no idea. I mean, I would imagine it's because it's the start of the technical day. Like, it goes from Tuesday to Wednesday at midnight. So I would assume that's why. But if I'm being honest, like I said about all the other concepts, bro, it's nice to know why they work, and it helps you be more in tune. But really, it doesn't matter. All you need to know is that you're looking for a manipulation from midnight open. What does midnight open mean? You're definitely trolling me, but it literally means the open of midnight, the opening price at midnight. When you say high time frame key level, then stay above midnight open, how would that look like? It looks like this. You'll see in the live chart examples. If it starts reversing before 8:30, yes, that's the next daily profile. So daily candle starts at 1800, but true day opens at midnight. Yes. But the actual daily candle open still matters. It's still something to pay attention to. I personally don't find it to ever mess around with my trades at all, so I just don't pay attention to it. I don't want too much on my screen, so I'd pay attention to what's most important. Can a high time frame key level also be liquidity sweep? Yes. Hey, whoever put the thumbs down, I just want to say, you guys are all mentees. So that means you guys are all learning. So I would suggest, unless you know for a fact what the answer to someone's question is, don't answer. That would be my suggestion, okay? I know it's you because you do it every time. But, yes, a high time frame key level can be a liquidity sweep. And typically, it's like a previous day's high or previous day's low. That's typically how it goes. Okay, guys, relax. It was not that big of a deal. But does anybody have any other questions about the model before I move on? Are we all good? If it hits a key level in London, surely it will start reversing in London. Guys, that's the next one. That's the next one. Do you have questions about this current one that we're looking at right now? All right, I'm going to move on to the next one. Get him more mad. Why? I don't even want to know what you're going to say to that. Johnny said it can only be PD array. I mean, all I can do is talk about how I personally use it. There's been a multitude of times where I have used the daily profile based on a previous day's high and previous day's low sweep. So if that's what Johnny says, then follow what Johnny says, but I'm telling you how I personally use it. Alright, so now let's go into the next one. The next one is London reversal, New York continuation. Now I'm sure the name kind of gives you an idea of what is happening and what the difference is. It's pretty similar to the last one. The time just matters. Okay? So pretty much the same thing, like I said. Midnight opens, you want a bearish drawn liquidity and a bearish high time frame key level. So we manipulate from midnight open, we go into the high time frame key level, and then we get a reversal, but this reversal happens during London. Okay, so this reversal already happened during London, and by the time we go into New York open, we should be somewhere around midnight open or below midnight open. And you would expect a New York continuation. So, like I said, me personally, I know people look at other time frames. Like I'm pretty sure Johnny looks at different times. Me personally, I consider London reversal. If the London reversal happens before 8:30 a.m. EST, I consider that a London reversal because it's still London. London crosses over into New York session. So New York pre-market starts at 8:30. I would consider that the start of New York liquidity or New York trading. So if it happens before 8:30 a.m. EST, I would consider it a London reversal. So in this scenario, obviously, we already got the reversal. So going into New York, you would expect a continuation to the drawn liquidity. So it looks exactly the same. The difference is time. This reversal needs to happen during London, and we need to be at midnight or below midnight for looking for a New York continuation to the drawn liquidity. Okay? Does that make sense to everyone in chat? Can we lock in, please? Okay. So now let's do a bullish example just in case. It has to be below midnight. It needs to be somewhere around it at least, because like sometimes you'll come into New York open after the reversal, and we'll be like chopping around midnight open. You just want to be somewhere around it. I look at for high time frame PD arrays, I'm typically looking at like hourly and 30-minute. It's typically what I'm looking at. Okay, so this would be a bullish example. I'm sure you can already imagine how it's gonna go. Wait. Okay, so now in this scenario, instead, we have a bearish or a bullish high time frame key level right here. We trade into it and we reverse, but the reversal happens before 8:30 a.m. EST, and we get back above midnight open. So you would expect a New York continuation to the drawn liquidity. So I'm sure it's all making sense, right? No questions, no nothing? Alright. Bro, electrolytes actually, like, I wouldn't want to say they make me ejaculate, but it's like my balls, like, they get like a, not even tingly, it's just like a sensation you can't even describe, bro. It just makes me happy. I don't know. It almost feels like my balls like soaked up the electrolytes like a sponge. That's what it feels like on the low. It's really fire. So, to say the least, my balls are hydrated. All right, but now let's go into the last one. The last one's really simple. It's just AMD. So you want to see a tight range London session. Okay. Staying around midnight open. No real tap into any major key levels or anything. No big moves. And then at open or at sometime around New York, like I said, it can start at 8:30 because we typically have like 8:30 a.m. news. You want to see a manipulation into a high time frame key level. Then from that manipulation to a high time frame key level, you're looking for longs back to your drawn liquidity. This one's not complicated at all. This one should be pretty simple. So this is a bullish example. Bearish example is obviously the opposite. All right, let me do this. Okay. Guys, 30 minutes and 1 hour. Oh, okay. He wasn't asking. Okay, I was about to cry, bro. Jesus. What time frame did you look up for the price to tap into? What time did you say? Yeah, 30 minute and the 1 hour. That's typically what I'm looking at. High time frame though. Oh, for AMD, it's the same. It's the same thing, bro. It's the same thing. It's not what you meant, but it's exactly what you asked. Oh, time. I was about to say, bro. Well, like I said, bro, if it's a London accumulation, then the manipulation should happen at the start of New York. So 8:30 a.m. EST. Anytime after 8:30 a.m. EST, we would want to see a manipulation into a key level and then book the drawn liquidity. And then obviously a bearish example is just the opposite. This kind of gets confusing on the low. I'm the GOAT. But yeah, so then a bearish example is obviously the opposite. Yeah, they start at midnight open. At least that's all I look at. Asia is supposed to be considered, but I've never considered, or like the daily open, I've never considered the daily open into what I'm doing. I'm not going to lie. And I've never had any issues. I mean, if I can do it without Asia open and just make it simpler, then that works for me. I don't want to include everything else if I'm doing fine without it. So just makes things too complicated. But yeah, that's all three of the daily profiles. If I'm being honest, it's literally like it's just looking for a pattern. It's really not that complicated. So let's go into live chart examples, man. Let me take a sip first. I'm stepping down my fucking drink. Bro lives in PR but uses Bacchus mod. What does that mean? Does PR just give me every item in Rocket League? What does that mean, bro? Yeah, so we're just yapping. Awesome. Just buy Alpha Boost. For one, you can't even trade anymore. It's out of the game. And two, no, bro. No. She wanna be wherever I'm at, telling me drop locations. I got 2 C1s waiting. My thing is that, like, you wonder why you ain't got no bread. You do too much complaining. Like, come on, bro. All right, let's do it. So today it's a little less textbook than normal, but it's still a good setup. So draw on liquidity. There's multiple draws in liquidity this day. ES needed to book all-time highs, so keep that in mind. Okay, so these relative equal highs were the main draw on liquidity for me, but this high and this high are also draws on liquidity. And we have midnight open right here. This candle right here, 12 a.m., midnight open. Midnight open, I'll make white. So whenever you see white, just know that's midnight open. Okay, so we have midnight open, and then we manipulate down into the key level. What is the key level? It's the 1 hour for value gap. But let's also start incorporating other things that I've taught you. So not only do we manipulate down into a 1 hour fair value gap and an order block, why else is it a good reason for us to get the reversal during midnight right here? Because everything below price, for the most part, is balanced out. Like if you go to the 15 minute, that 1 hour gap doesn't really exist. Oh, never mind, it does. But realistically, I was thinking about New York Open. Actually, scratch everything I just said. There's an imbalance here. But, I mean, still, order blocks here, fair value gaps here, we tap it, we displace. By the time we get to New York Open, it's balanced out price action. But what I'm saying is midnight opens, manipulates down to the 1 hour fair value gap, and then we get the reversal. Did the reversal happen during New York? No, it happened during London. So this is a London reversal, and we have draws on liquidity to the upside. So we're looking for a New York continuation to our draws on liquidity. Okay? So if we're looking for a New York continuation in this scenario, this is what I was talking about. New York opens right here. Below this 1 hour fair value gap, what do you notice? Price is already completely balanced. Is there any reason for us to go below this 1 hour fair value gap? No. So it's logical for the New York continuation that we're looking for off of the London reversal is more than likely going to happen right here. And what do? We tapped into the hourly fair value gap and displaced right to our draws on liquidity. So how did I use that for an entry today? Tap into the 1 hour fair value gap, waited for this 1 minute fair value gap to get inversed, entered on this fair value gap. Targeted draws on liquidity. Real simple, real easy. Daily profiles are not complicated once they're in your brain. It is not a complicated thing at all. Okay, and that's it. That's it, man. And this isn't even like a super textbook setup, but let's go into, I mean, we're literally, I didn't plan these examples. It just happens every single day. So we're going to go back through every single day's worth of price action. I'm going to show you. I should put down my fucking drink. Einstein and Eater. Alright, let's go into, so this was today, which is Thursday. We're not going to do Wednesday because that was FOMC day. It's not a good day. You enter on the inverse when it hits 0.79. No. That doesn't have to do with daily profiles, but I'm going to answer it right now anyways, just because it's a good point. When I told you guys, stop putting clown emojis for real. When I told you guys that in some scenarios I wait for the 0.79 to get disrespected in order to like enter a long or enter a short, like let's go to the trade from today. So like for example, this range right here, like when I showed you guys the fib thing and I showed you that I wait for the 0.79 to get traded above in order to enter, that's only in a scenario where I'm not bullish. So like let's say I'm bearish on this day and we go to the downside, the only way that I would long and change my bearish bias is if we disrespected this range, because then the implied draw on liquidity is at least this high. You know what I mean? So in a scenario where I'm actually bullish and we're playing my narrative, which is, like I told you, I built my narrative in front of your eyes. Like I told you, the hourly fair value gap is very likely where we're going to get the New York continuation. We pulled into the hourly fair value gap, and then that inverse happened. You want to long in a discount and you want to shorten a premium. Like that's the ideal scenario. The only reason why I showed you the disrespect to the 0.79 is for like adjusting your bias. So like I said, in that scenario, I'm already bullish, so I want to long in a discount. I don't want to long in a premium, you know? So what I wanted was the hourly fair value gap. We got it. Market disrespected this 1 minute fair value gap. It's the only bearish 1 minute fair value gap in the price leg, and created a fair value gap. It's pretty likely that it's going to hold. What's another reason why it's likely to hold? Because like I taught you guys, what makes every single concept high probability? I'm gonna draw it up again because I don't want you guys to forget. I do this, bro. I've drawn this up for you like 7 times. That's why I can draw it up so quick, bro. Okay, so in this scenario, what makes this inverse for value gap high probability? It's the fact that we came from a key level and we're trading to a draw on liquidity. That's what makes every single concept high probability. Know your draw on liquidity, know your narrative, and then this exact setup right here is what makes every single concept higher probability than others. So that's exactly what we got here. High time frame key level was at this low with the 1 hour for value gap. Draw on liquidity was the relative equal highs, and ES's all-time highs. So this is exactly what I drew up. This is literally the exact scenario. Look at it. So that's why I'm not waiting for the 0.79. I already am bullish, so I want to be able to long in a discount. Like that's what you should be doing the majority of the time. But like for me, once we cleared the 0.79, I felt like my TP was guaranteed. You know what I mean? Like that's when I was like, no sweat, we're gonna go get it. So just keep that in mind. The rule of thumb that I gave you about longing in a discount and shorting in a premium is what you should be doing in most scenarios. The disrespect to the 0.79 is just, if you are bearish, you can become bullish once you see that happen, and vice versa. So does that make sense? Okay. So you wait for a retracement if the inverse is a BPR, but if not, no. Rewatch the inverse class, but I'll tell you real quick. The rule for entering on an inverse is if the candle close that turns it into an inverse allows a good risk reward, then you can take it on the close. Right? But to me, to these highs, a 1-to-1 is not good enough. So I will wait for I'll wait for the retrace into the inverse, or in this case scenario, I took the fair value gap because it'll give me a better risk reward. That's the rule. If the candle barely closes above the inverse, I'll long it as soon as it closes. But if it closes way above like this, then I wait for the retracement. That's it. But I do have to move on because this is a class about daily profiles. So I would go watch the inverse the inverse class if that didn't make sense. So now let's go to, we're going to skip FOMC. Let's go to Tuesday. What if New York taps into a bearish PD array first, like today? I have no idea what you're talking about. Are you saying like before we book the draw on liquidity? Because if you are, then that's kind of the whole point. Like that's what you want. Alright, let's go to Tuesday. She wanna be wherever I'm at, telling me drop locations. I'm not singing It's My Birthday, dude. Okay, here's midnight open. Do you already see it? Please tell me you already see it. Please tell me you already see it. Please tell me. Okay, this is a more classic. This is a more classic setup. Okay, so midnight opens, immediately trades up. We're taking out all these relative equal highs, but the main key level that we took out on this manipulation to the upside is previous day's high, or previous week's high actually. This right here is previous week's high, and we took previous day's high because we took Monday's high. So that is our key level, right? We only went up from midnight open. We didn't go down and tap into any high time frame key levels. We went up and tapped into a key level. So we're up here during New York. It is anticipated that we would get a New York reversal. Okay? And like I said, your draws on liquidity when you're looking for a New York reversal is typically previous session liquidity. So right here, we have an Asia session low, or we actually have relative equal lows at the Asia session low. So that ended up being the final draw on liquidity. And then here, we have a London low. And here we have an hourly gap that also has a London low within it. So two sets of London session liquidity, right? So now let's drop down. And we look, man. We take a little gander over here, okay? So Um, this is where order flow and daily profiles is how you win. At least me personally, that is literally my setup. Okay, so when you identify the daily profile, for me, I'm looking for bearish order flow to start. Like in this scenario, we have a bearish daily profile. I'm looking for bearish order flow to start. So when does bearish order flow start in this scenario? At the inverse of this 5-minute gap. I mean, obviously we end up like popping up and taking these highs, but when we took these highs, we did form an SMT. So formed an SMT, and then immediately still had a bearish candle close. And what else did we do? We went below this order block. So things are looking spiffy. I drop to the 1 minute, I look for an entry. This was a choppier day though. Typically it delivers a lot cleaner. We have been having like choppier deliveries. But in this scenario, we have for some reason you guys love these, but we have a BPR. I took these shorts. My broker statements show me taking these shorts. We have BPR. I'm more so looking at the fair value gap, but people love looking at BPRs for whatever reason. So bearish order flow starts. When we get the close below this low, we do form a breaker. I thought we would hold this breaker. We didn't. We end up holding into this gap, but the order flow is still bearish as long as we respect this gap because it's a premium bearish PD ray. That needs to hold. So we pull up. We respect that bearish PD ray. This is where I got short. Where did I write it to? Previous session liquidity. Because like I told you, typically with daily profiles, you always want to be targeting previous session liquidity. So this was my final TP. I got out everything here. I'm pretty sure I took profits at these lows, and then I was all out here. But we ended up running to this gap. And then we ended up getting this full pullback that I didn't expect. But at the end of the day, the daily profile delivered. We came all the way back below midnight open, and we took out Asia lows. All right, real quick. This is the last time I'm explaining BPRs because they do not matter. It's just a new concept that ICT made so we can get some more YouTube revenue. Okay? A BPR, the difference between a inverse fair value gap and a BPR is when we close through the fair value gap and create a new fair value gap. That's it. So it's still just an inverse fair value gap. It's just an inverse fair value gap with a fair value gap in it. That's literally it, bro. It's like people obsess over a BPR. It does not matter that much, dude. It's the same thing as if it were just a regular fair value gap or if it were just an inverse fair value gap. You do not need to trip on it, bro. Trust me. Yeah, like he literally he just wanted some more ad revenue, bro. We're good. So yeah, I mean that's another way you could have used it. Like I said, I didn't expect a reversal after taking this, but the daily profile ended up delivering. So now let's go to Monday. Didn't this day tap into a bullish PD ray? I literally just showed you midnight going straight up, like without hesitation, straight to the sky. So no, it didn't tap into a bullish PD ray. Check it out. Midnight open, straight up, not even close. Not even close to going down. Straight up. Zoom in. All right, let's go ahead and zoom in. My bad. All right, but yeah, no, it didn't. I need to be nicer. I'm not gonna lie. I do need to be a lot nicer. My bad. All right, so now let's go to Monday. So far, we've gotten this right here was a London manipulation, New York reversal, and then the example that I showed you from today's price action was a London reversal, New York continuation. So the last model that we need to see an example of is AMD. So let's go look for AMD real quick. Because I'd rather just show you examples of like all of them instead of like one with 17 examples, you know what I mean? Okay, this could be a good example. Can it though? Dun, dun, dun. She wanna be wherever I'm at, telling me drop locations. No, this isn't the best example. Let me see. I know we got some good examples last week. Yeah, like this one's a good example. So, I'll zoom in to show entries, but before I do, let me just show you the daily profile. So this is what I mean. Tight range accumulation. Here is here's midnight open. And then this candle right here, pay attention to the time. That's market open. So London accumulated, didn't tap into any major key levels or anything. And then right as New York starts, where do we go? No, actually, I want to show you specifically. Look what happens right at 8:30 a.m. We're not going anywhere this entire time. 8:30 a.m., what happens? We start to move down. Then market open. Books the 1 hour for value gap, and then we push up and we deliver our drawn liquidity, which is the hourly for value gap. Okay, so you see the AMD. Accumulation during London. New York opens, pushes into this 1 hour for value gap, and then we push and deliver the bearish 1 hour for value gap to the left. So now, let's drop and find entries, because I also took longs this day too. Bro, daily profiles are super simple once you have them. Okay? So here, I'm sipping that motherfucking drink. Okay? So, I mean, honestly, I can't even remember my entry from this day, but I'm just going to look at what I'm seeing. Jesus, bro, come on. We barely disrespect that breaker, but, I mean, realistically, eyes should be on this fair value gap because it's the last imbalance on this price leg. But remember what I told you makes a high-quality, high-confluence PD array. It's trading from key level to drawn liquidity. So we know that this is AMD, daily profile, and we got the manipulation into a key level, and we're seeing displacement to the upside right at the start of the macro. So we're trading from key level to drawn liquidity, which is right here. That makes this fair value gap a low risk buy. That makes this fair value gap higher probability. So you can take this fair value gap. I mean, maybe put stops down here. I wouldn't even put them that low. I'd probably put them like right here. And then you just ride it to the draws and liquidity. First point of interest for sure is the end of this low resistance liquidity run. Remember I told you guys about the failure swings? Failure swing, failure swing, failure swing, failure swing, leading to the highs. So that's low resistance. And remember what else I told you? Whenever there is a ton of failure swings, there's a low resistance liquidity run, we push through it very aggressively. Look how fast we pushed through all those highs. Took them out pretty much instantly. Then the drawn liquidity books right here. To the tick, and then we push down and we chop around. I mean, are you seeing it? That was all three daily profiles. Pretty much showed up back to back. So if the drawn liquidity is booked during pre-market, do you not trade? The drawn liquidity doesn't book during pre-market. I'm not going to lie. But if the drawn liquidity, so let me think of an example. So like, let's say we have a weekly drawn liquidity in mind. Let's say there's a daily fair value gap that we're trading up to that I would want high of the week to be. And we're setting up for a bullish daily profile, but that daily fair value gap books before market opens. At that point, the daily profile can change. Okay? So I'm going to draw that up for you because it can be confusing. But that's like a more advanced way to use daily profiles. But let's say this is a daily fair value gap. Let's say, let me see. Let's say we have, this is midnight open. We're manipulating down. We got into a key level. And then this reversal happened during London. And then we booked this like at the start of New York or something. Okay, so let's say this down here is a key level. This is a daily fair value gap that I kind of wanted high of the week to be, and it was my drawn liquidity for the day. At this point, you have to be open to the model changing to a New York reversal. This rarely happens, but I'm glad that you asked because it's something to keep in mind. But like I said, keep in mind, it rarely happens. It does not happen frequently at all. In the past, I would say 2 to 3 months, it has only happened to me twice. It does not happen frequently. So at this point, you would have to consider a New York reversal. But another thing that you can consider is us disrespecting this gap and looking for the next drawn liquidity. So if we don't hesitate here at all and we don't start bearish order flow, then I would just continue looking for longs. But in this scenario, if this is going to be the high of the week, hypothetically, and this is the drawn liquidity for the day, then we should start bearish order flow back to the downside. Like, let's say this is a 5-minute order block and we disrespected it. From there, you can consider shorts back down and target London lows. But like I said, this rarely happens. Very, very rarely happens. If you think the drawn liquidity for the day booked during pre-market or like right as New York Open started, then you can start looking for a New York reversal setup. But I don't want to overcomplicate you too much. Focus on the basics because like I said, this rarely happens. But yeah, that was how long is the class? I can't make it too long. 40 minutes. Well, I showed an example of each. Is it making sense? Okay. Well, yeah. I don't want to run the class too long, so you guys should just make sure you're finding examples on your own. But if you have any questions, ask them now before I end the video. Not any questions. Questions about daily profiles, dude. Does it clap when you run? That's not a... Because the daily profile didn't set up properly. That usually means that I don't have a clear drawn liquidity that aligns with the daily profile. But like I said, that's another example of something that rarely happens. That's only happened to me one time. And I was also drunk and woke up the next day and realized that there was actually a setup. So, and when I say drunk, I'm not saying that like metaphorically. I was genuinely drunk. Okay, let's see this. Since there was so many 1 hour for I guess below, how would you only know it's going to manipulate to that one? Because in that example, when you went down to the 15-minute time frame, there was no actual imbalances below. And also, like I said, when the daily profile is set up, I look for the start of bullish order flow. So we went into that first 1 hour for value gap, and we began bullish order flow after the manipulation down into it. So it's worth a shot going long because order flow became bullish from the manipulation into the high time frame key level, which is exactly what the model is and exactly what I showed you. Yep. I can't believe I messed up my beard, bro. It's like patchy. Sipping that motherfucking drink. Alright, so nobody has any questions, so I can end this recording because it's already 45 minutes. For London manipulation, New York reversal, how come we would start reversing in New York even though we tapped into the P ray in London? I don't know, bro. I don't move the market. It's just what happens. I have moisturizer, bro. That's not going to change the fact that I accidentally cut a part of my beard too short. And you better not be talking about semen. I have real moisturizer. I knew it, bro. You freak. Oh, oops. Alright. Should more make it clap as an outro. Yeah, so I'm going to go ahead and end the video. Alright, YouTube. This is the most important lesson of the entire series. If you don't understand anything, make sure you understand this. Watch it 17 times in a row. This right here will single-handedly, I'm never going to be one to guarantee anything, but this could single-handedly turn you profitable. So make sure you understand this, okay? But that is it. I'm out of here. Doses.